Good morning, everybody. It's Tuesday, August 20th, 5:25 a.m. Central Time. Grain markets are mixed this morning. December corn futures unchanged at $4 and a quarter. November soybeans down 1 3/4 at 9.74 and a quarter. December Chicago wheat up 1 1/4 at 5.53 and a half. December Kansas City wheat up 1 at 5.57 and a half. December spring wheat down 2 1/4 at 6.01 and a quarter. Let's start off with the crop tour.
So the Pro Farmer Crop Tour released its corn and soybean findings from southeast South Dakota yesterday. The state's corn yield was pegged at 156.5 bushels per acre, compared to last year's tour estimate of 157.4 bushels per acre. While the tour projects a lower corn yield year over year, USDA has projected a 10 bushel per acre increase. Soybean pod counts were up 1% compared to last year. USDA projects that the state's soybean yield will rise by 7% compared to last year. Some traders considered the findings to be friendly with regard to corn and soybean prices.
The best way to analyze or use this data, I believe, is to take USDA's year-over-year changes and then compare them with the tour estimates year-over-year changes. So in the case of corn and South Dakota, the tour says we're actually going to be a little bit worse than last year, whereas USDA says we're going to be 10 bushels better. So if anything, the tour findings for corn out of South Dakota could be construed as being a little bit friendly. The market, when you go to soybeans, it's a similar deal. So the tour says you're going to be better, but only by a small margin with regard to soybeans and pod counts. USDA says you're going to be quite a bit better. 3 bushels is a lot in soybeans. USDA's got a 47 bushel per acre estimate for South Dakota. Last year was 44. So that's like a 7% increase. I think the tour is talking a 1% improvement. So in both instances for the state of South Dakota, maybe not as good with regard to year over year changes as USDA had suggested. What about Ohio?
So the state's corn yield was pegged at 183.3 bushels per acre compared to last year's tour estimate of 183.9 bushels per acre. While the tour projects a mostly unchanged year over year corn yield, USDA recently projected that Ohio's corn yield would decline by 10 bushels per acre versus last year. The state's soybean pod count was down 2% compared to last year. USDA projects that the state's soybean yield will increase by 1.7% compared to last year. The findings in Ohio were a mixed bag with regard to market sentiment.
Yeah, so when you look at the corn numbers for Ohio, the tour says we're close to unchanged, but USDA is calling for this 10 bushel reduction. So maybe a little bit better in Ohio than what USDA would lead you to believe. The one thing you should note is that the drought-stricken areas of Ohio were further to the east than areas that the tour actually sampled. Soybeans, USDA is calling for a 1 bushel per acre increase, and the tour is saying, no, you're going to actually be off a little bit. So I think for both states, the soybean numbers were maybe a little bit friendly-ish, and then corn more of a mixed bag, maybe friendly for South Dakota, maybe not so much for Ohio. The markets did rally yesterday. December corn futures gained almost 8 cents per bushel. November soybeans gained 19 cents per bushel. Were those gains, did the markets rally because of the tour? Maybe they did. Maybe they didn't. I don't know. I can't tell you with any degree of certainty why the markets do what they do. You look at these gains, grand scheme of things, and they're really not that substantial. It's a small pop in markets that are still trending lower. Today, the tour will get into, on the western leg, they're going to do the southeast portion of Nebraska on the western leg, and then the eastern leg is where you should see some very, very good crops reported in the western part of Indiana and the eastern part of Illinois. I've heard crops in those areas described as being scary good. They're so good. I mean, record crop potential in those areas. We'll see if the tour confirms that. Those results will be out tonight, I believe.
U.S. corn conditions were unchanged last week. The crop was rated 67% good to excellent nationally as of Sunday, steady with the prior week. The rating was in line with the trade expectations and was the best for the week since 2020. USDA estimates that 5% of the crop is mature nationally versus 3% on average. U.S. soybean conditions were reported at 68% good to excellent nationally as of Sunday, also unchanged from the previous week. And like corn, the rating matched trade expectations and was the best for the week since 2020. USDA estimates that 81% of the crop is setting pods versus 80% on average.
Unchanged ratings this time of year is indicative of big crops, and we've seen this quite a bit here the last couple of weeks, that the ratings have a tendency to decline seasonally on average as harvest approaches, and we're not really seeing that. We've been pretty much flat. So the ratings, I know the ratings aren't perfect, but they would continue to suggest that we've got potential for trend or above trend yields for both crops. What about wheat?
So the U.S. spring wheat harvest is behind schedule. The crop was 31% harvested through Sunday versus 18% the prior week and 36% on average. The crop was rated 73% good to excellent nationally versus 72% the prior week and 70% on average. The U.S. winter wheat crop is just about harvested. It is 96% harvested versus 93% last week and 95% on average.
There is now some concern that I have heard regarding the spring wheat crop in North Dakota in particular. They had some heavy rains over the last week or 10 days, and you're not seeing that really reflected in the crop ratings. You're certainly not seeing it reflected in spring wheat futures. If you guys have an update, if you're in North Dakota, you caught a bunch of rain and you think the crop's gone backwards here, let me know. Drop something in the YouTube comments or shoot me an email.
So if you guys have not checked out our premium content yet, you sure need to do so. Joe, can you tell me about yesterday's premium video?
I did a little bit of a history lesson on the crop tour and corn prices and yields. How does the crop tour compare to USDA, and what actually happens during tour week with regard to December corn futures? What happens year in and year out? Is there a trend? I had some charts and graphics that were available for download. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel it anytime. No other fee, no other obligation. Nobody will try to sell you anything else. If you sign up, you'll get our morning email every single business day at 5 a.m. Central Time. That email includes our 6 most recent premium videos. There's a new one out every single business day. Lots of charts, graphics, all of my cash grain marketing recommendations. I mentioned that in detail yesterday are included here. Give that deal a shot this morning, guys.
Union strikes could soon have a serious impact on Canada's rail system. The country's 2 main railroad companies, Canadian National Railway and Canadian Pacific Kansas City, are actively negotiating labor deals with the Teamsters Union. If agreements are not reached, both companies will halt all freight rail services in Canada on Thursday for the first time in history. It's estimated that the rail stoppages would result in daily losses of $733 million. The situation comes as harvest is beginning and the railroads are needed for grain shipments. Daily grain shipments in early September are slated to rise to 138,000 metric tons, valued at just over $55 million.
This network, Canadian National and Canadian Pacific Kansas City, I think they merged, but in any case, I mean, it goes through a lot of the Midwest, a lot of the Corn Belt, of course, a lot of Canada. The last thing we need with these monster crops about to be harvested is a logistics problem. The last thing we need is for these big corn and soybean crops to be essentially stuck in the interior. It would be very bad for basis if this thing were prolonged. The other issue that's been in the news lately is low water levels on the Mississippi River, which are expected to worsen as harvest approaches, which again, if realized, if it gets bad enough, it results in a situation where grain just gets stuck, and that's not good for prices. It would be felt immediately in basis, and then maybe even in futures if the export demand got bad enough. So we have some potential logistics issues is what I call them.
U.S. corn shipments were strong last week. USDA reported that 46 million bushels of corn were inspected for export during the week ending August 15th. The print was up 18% from the previous week and up 128% compared to the same week last year. Soybean shipments were reported at 15 million bushels. The print was up 14% compared to the prior week and up 24% versus the same week last year. Wheat shipments were at the lower end of pre-report expectations at 13 million bushels. The print was down 48% from the previous week, but up 12% versus the same week last year.
That's an excellent corn number seasonally. We've seen a lot of this here the last few weeks, these kind of contra-seasonally strong corn shipment numbers. Soybean numbers, okay, we're going to hit the targets for the most part for old crop, which is going to wrap up here pretty soon. U.S. corn and soybeans are competitive on the export market, which I guess brings us to the last story we've got today.
So we had a couple of flash sales of soybeans yesterday. U.S. exporters sold 12 million bushels of soybeans to China for delivery during the 24-25 marketing year. Exporters also sold 4 million bushels of beans to unknown destinations for delivery during the 24-25 marketing year.
These are some slightly better sales for new crop. As I mentioned prior, we're competitive. To my knowledge, U.S. soybeans out of both the Gulf and PNW are competitive, landed in China relative to Brazil. So we may start to pick up some export business here. Corn has been competitive for a while, and we haven't really seen a big uptick in sales. We really need to see that. That's how you put an end to this sell-off, is you find some demand on the export market in a material fashion. And this is a start. I don't know if it's enough to say that we've uncovered the big demand base, but it's a good start. We could use some more. What did cattle do yesterday?
Cattle futures were mixed. Feeders were unchanged to 40 cents lower. Live cattle were 5 cents lower to 72 cents higher. Box beef was down yesterday. Choice ended the day at 315.55. That was down $1.90. And select ended the day at 302.01. That was down 58 cents.
Outside market's pretty quiet. U.S. dollar is off just a little bit. Stocks are mixed. Bonds off a little bit. Gold's up $20. Crude oil is up 15 cents in the October WTI 73.80 last trade. Have a great day, guys. We'll talk to you on Wednesday.